Hello and welcome to Martyn Lucas Investor. My name is Sensei and you are here today for the morning forecast show. Well, behind me you can see it's quite rainy, but hopefully it's not going to be like that in the markets. We're here every single morning to see whether it's going to be a thundery day in the markets, just like it is where I am currently, or is it going to be a sideways moving day, which is not always a bad thing. Sometimes consolidation is good. Or is it going to be one of those days where we get some good inflation data and we start making some money? Well, we will find out in the next half an hour / 45 minutes what the market wants to do today, because we've got some very important data coming out very shortly. So what is that data? I am looking at XRP's chart right now. XRP is bouncing slightly, sort of a double bottom at $3. Let's see if that double bottom holds. Again, I think we're going to consolidate for a bit, go up, go down, nothing major for the next month, but we will see. It's nice to try and form a bottom at $3. That would be very bullish if we don't break $3 with and hold it, but there is always that possibility of $2.62. But today's news is a bit different. So we're waiting for inflation data, we're waiting for jobless claims. We've got a few bits of information coming out today that are pivotal. Yesterday we saw the FOMC meeting. I'll give you a recap of the FOMC meeting. I've done a story on it. Let me find it. So here is the FOMC meeting from yesterday. We had a pause, a hold, whatever you want to call it. That's what we were expecting. If you are here with us live, please do hit the like button. Let's get the word out that we are live. So it does really help if you press that like button. If you haven't done so already, please do subscribe as well. But the Fed holds rates steady as two governors stage historic descent. The Federal Reserve, so you can see that Jerome Powell, there's two people on his own, two of the governors that are also saying cut, Donald Trump saying cut, and then there's Fed Jerome Powell, which doesn't want to cut. And even more concerning, I've just refreshed the Fed Watch tool to see what the likelihood of a cut is in September, and it looks like so far at the moment, and this can change, we're still about a month away from this meeting, or over a month and 17 days away, it looks like the odds are no longer in a favor of a cut in September. They are pricing in a hold. No rate cut in September is what the markets are pricing in. Remember, I said yesterday, we're gonna hold, but let's see what Fed Jerome Powell says. This September chart will change, and it really has changed. Before, it was in favor of a cut. There was even a chance of a 50% a 50 basis point cut, whether that would have been a cut in July and a cut in September, but that's what was pricing in. It was not pricing in a hold. But after his remarks, the market and the Fed Watch tool is now telling us there is now a 60% chance that we don't get a rate cut in September. Well, again, this can all change by that date. It can all change today as well, because we've got some more information coming out. So let me bring you firstly the information from FOMC yesterday, and then we'll come on to the live report of inflation, which is going to be important. So good morning, everyone. I can see you all in the chat. Thank you for tuning in. Perfect. So yesterday, the Federal Reserve left its benchmark interest rate unchanged for the fifth straight meeting on July the 30th, resisting pressure from President Trump to lower borrowing costs. In a rare move not seen since 1993, Fed governors Christopher Waller and Michelle Baumann dissented, voting for a quarter-point cut. Chair Jerome Powell acknowledged that while higher tariffs are starting to affect good prices, the broader economic impact remains unclear. The Fed's updated statement removed prior language about reduced uncertainty, instead stating that the economic uncertainty remains elevated. Powell emphasized no decisions have been made regarding a potential rate cut in September. So why does this matter? The dual dissent exposes deepening divisions within the Fed as Trump ramps up calls for aggressive monetary easing. Markets' expectations quickly shifted. Odds for September cuts fell from 63% to 45% after Powell's remarks. The dissenting governors both considered potential successors to Powell when his term ends in May 2026, added a political layer to the monetary policy debate. With rising inflation risks from tariffs and escalating public criticism of Powell, the path ahead for interest rates is increasingly clouded. A historic split in Fed leadership during a politically charged cycle signals more than policy tension. It hints at a looming power reshuffle at the top of the US central bank. We are starting to see some instability within the Fed itself. As I just mentioned, that's the first time since 1993 that we've got governors that are not agreeing with the chairman. We've got two that are saying cut right now, and Jerome Powell isn't cutting. So there is now, and as you just heard me read, they are looking to be successors to Jerome Powell. So in my opinion, it certainly is getting a bit political within the Fed, and that's what shouldn't happen within the Fed. The Fed should be this independent power, not political at all. But it is certainly turning political now, in my opinion. So that's not very good for the stability of the markets, in my opinion. But that's the backstory of what's going on. That's why September is now not pricing in a rate cut, because Powell has said that the economic uncertainty remains elevated, which if there's uncertainty, he doesn't want to cut because he doesn't want inflation to come back up, so that he doesn't want to raise rates again. So we are in a bit of a kerfuffle, if I could use that word. But that's what's going on right now. But today is what can change this. We've also got some Bank of Japan news, so stay tuned for that. We've also got the White House crypto report coming up as well. I've done some research into that. But what's happening in the next 45 minutes is inflation and labor market. So let me bring you there for a second while I get this open over here. Let's see who's in the show. If you have just tuned in, please do hit the like button if you haven't done so already. Let me bring this over here. Yeah, we've got all of this data coming out shortly. We've got the continuing jobless claims. We've got the core PCE. This is the Fed's preferred method of looking at inflation. It's a day after the FOMC, so this will have a real impact. We've got core personal consumption expenditures. We've got employment cost index. We've got initial jobless claims. We've got initial jobless claims 4-week average. We've got PCE price index month on month. PCE price index year on year. We've got personal income, personal saving, and the two big ones for me would be that obviously the PCE, whichever way you want to look at that, month on month, year on year, that's what we're going to be focusing on, as well as initial jobless claims. Initial jobless claims will have a big impact on a sort of a recession scenario. Some people are now calling for a recession. Well, we will find out if jobless claims are quite high, potentially coming closer to that 400,000. We're not anywhere near that right now, but if we start seeing a big uptick, around 400,000 is when it starts getting a bit scary for a recession. If we start continuing this uptick, then we can start agreeing with the recession claims. But also PCE is obviously what we want to have a look at. If inflation is going up, why would the Fed cut rates? So we'll have a look at both of them, which are coming out in the next 45 minutes. So, all eyes are on inflation. This morning's US economic data could reset markets' expectation in a pivotal way. Please do hit the like button if you are with us. We are low on likes. I'm not sure why. I'm sure everyone's a bit tired this morning. The focus is on June's core PC inflation, the Fed's preferred gauge, and weekly jobless claims, both critical indicators for monetary policy and recession risks. So, core PC inflation. Economists expect 0.2% month over month, 2.7% year over year. It's a bit confusing on the economic calendar. It does say 0.2%. 0.3, but they're rounding it wrong in my opinion, because forecasts from Cleveland Fed nowcast point at 0.22% month-on-month increase, with consensus estimates ranging from 0.2 to 0.24. So I wouldn't say we're expecting 0.3. I would say 0.3 would be a pretty bad inflation reading. 0.4 would be even worse, but I think 0.2 would be okay. Anything lower would be great. So a cooler print, a 0.2% or less month on month, or 2.6% year on year, would re-energize hopes for a rate cut later this year. A hotter reading above 0.3% or above 2.8% year on year would raise concerns about sticky inflation, reducing the likelihood of near-term easing. So that's what we're going to be looking at. Those are the numbers to keep an eye out for. I would say, look, anything can happen. This information can come out, some other information can come out. But what I'm looking at is if it's 0.2% or lower, I would expect a rally in the markets. If it's 0.3% or higher, I would expect the markets not to take that well. Even though it looks like the consensus 0.3, it's actually a bit lower. So that's one side of it. The other side of it would be initial jobless claims.
Admatso donated 190 Norwegian kroner through a super chat. Proud of my new badge. Flex bicep emoji. Looking forward to 1 year. Smiley face emoji. BTW Sensei. Did you see my message on Substack?
Wow, Matthias, you're always supporting the show. I really do appreciate it. Congratulations on your 6th month badge. Let me just... 100. I need to convert this into pounds so I can put it on the screen. 119 Norwegian kroner in USD. Thank you for that. So that's 11. That's $12. Let me put that on the screen so we can put that there. There we go. In answer to your question, what was it? Yes, looking forward to 1 year. That'd be great. Did you see my message on Substack? I did just before the show when I was doing the newsletter. So I'll be responding to you, Matthias, straight after the show. I haven't actually read your full message, but I saw I had a notification. I didn't have time this morning as I was doing the newsletter. But the good news is I've seen it and I'll be replying to you. Matthias, thank you so much as a premium member on Discord and all your support, of course. Sorry. Premium member on the newsletter, and I'm sure on Discord as well. We will be replying to you very shortly. So thank you for the support and your message. So 2 things. Inflation, that's what you're looking for. The other side of it, the other important number I would say coming out in the next 40 minutes would be initial jobless claims. So initial jobless claims are expected to land around 230,000. Last week's figure came in at 217,000 as continued labour market resilience. So right now it's resilient. They don't really need to cut rates because the market's resilient. That's one way of looking at it. But at some point, this is just increasing. If it starts... A steady print around 230,000 would reinforce the soft landing narrative. If you go past 250,000, it can increase risking rising labour market stress. So if we see a number around 250,000 today, I would be extremely concerned because that would be really coming into sort of recession, like the trend will be coming into recession territory. If claims rise towards 400,000, so that could be over the next weeks or months, markets would likely begin pricing in a recession. You start getting close to that 400,000, or you start coming, the trend is towards the 400,000, you get to 400,000, that is a big recession indicator. So 2 things we need to look at, jobless claims and inflation. If we get a massive uptick in jobless claims, then that would be pretty bad. So that is what we're expecting. That's what's coming up in the show in about half an hour's time. So do stay with us because this is going to be very, very important. Why are usernames showing not our names? Anyone know? It's YouTube going back and forth. They did this a month ago, then they went back to display names, now they're back to usernames. So if you go and change your username, go and find your username. They're all going to be unique, so you have to create your own. I would recommend everyone does it. I think it's like YouTube/username or something. Just type in change my YouTube username on the internet or find it in your settings. And everyone who's watching should go and change their name to something that me and Martyn recognise, because we love knowing who you guys are. And now that usernames are changing, it's pretty hard. So go and change your usernames to something that will help us identify you. If you've got random numbers and stuff and it's not what your display name used to be, it's hard for us to recognize you, and we want to know everyone in the family. So please go and change your usernames. So, okay, that's that one story. We'll come back to that because that will be dropping very shortly. If you have just tuned in, please do hit the like button. We're covering the inflation and jobless claims very soon. This is what happened yesterday, and I told you I'll be covering it. So we have got a deep dive on the White House crypto report, context and analysis. So yesterday, the president's working group on digital asset markets released a 163-page report detailing how Trump's administration intends to establish the US as the crypto capital of the world. The document is the administration's first comprehensive crypto strategy, fueling the 180-day mandate from January's executive order that created the working group. The report fact sheet emphasizes a fit-for-purpose market structure to foster innovation, protect consumers, and ensure American leadership in digital assets. It arrived after a milestone week in Congress, which saw the passage of the Digital Asset Market Clarity Act and the Genius Act, widely interpreted as foundational steps towards a golden age of crypto. So this is for the premium subscribers of the newsletter. I will cover a few points. The key pillars, the market structure and DeFi, bank regulation and modernization, stablecoin oversights, illicit financial and finance and taxation, DeFi integration and tokenization. I talked to you about the strategic Bitcoin reserve and altcoin ambiguity. But what I'm going to do is keep this for anyone who's a premium member. I don't want to be giving away deep dives too often because there are people supporting the newsletter. The one big thing today is 2 Fed governors broke ranks to push for a rate cut, the first such descent in over 30 years, with inflation re-accelerating and election pressures rising. The Fed's internal unity is cracking, which is concerning, considering they're not supposed to be political and we want to see them as a stable entity, and it doesn't look that way. So that could build out in the next few months. It could get worse and worse, so we'll have to see. That could come in side by side with a recession, which we don't want to see, of course, but we will find out. Money move of the day. When central banks hesitate, diversification matters more than ever. Keeping part of your portfolio in assets that behave differently in rate cycles, like commodities or dividend-paying stocks, can help you stay balanced without betting on the Fed's next move. You don't have to know the next move. You don't have to bet on the next move. As long as you've got a diversified portfolio, in my opinion, you can weather the storm, because over time, historically we've seen markets perform well. So as long as you're diversified, you are all good, in my opinion. That's the market snapshot. You get that every day in the newsletter as well. So we covered the FOMC report. What we also have was yesterday's mega beats. Meta and Microsoft dominate AI race with massive Q2 beats, stock surge. We've got we had that crash after FOMC, and then it was just completely brought back up solely by Meta and Microsoft. So Meta and Microsoft yesterday had their earnings and delivered a standout Q2 2025 earnings, each surpassing Wall Street's expectations and sending their stock sharply higher in after hours trading. Strong valuation that colossal AI investments are starting to deliver. Microsoft's reported revenue of 76 billion. That's 18% up year on year, and earnings per share of $3.65. Beating forecasts of 73 billion and 3.37. So they really did beat on earnings pretty in quite a large way. Azure cloud revenue topped 75 billion annually for the first time, with a 39% jump in Q4 in Azure and related services. Microsoft's stock jumped 9% after hours, pushing its market cap past 4 trillion. Alongside Nvidia, it's joined the special club of Nvidia. Only 2 companies above 4 trillion, Nvidia and now Microsoft. Who would have thought? There we go. Meta posted even more dramatic numbers with 47.5 billion in revenue, earnings per share of $7.14, crushing projections of $44 billion and $5.88. Advertising revenue hit $46.5 billion, while daily active users across its family of apps reach 3.48 billion. That's literally half the world's population. What's the world's population these days? I don't even know. Population of the world. 8 billion. 8.1 billion. So what was that? 3.4 billion. Yeah, nearly basically 40% of the world's population has a Meta daily active users. That's absolutely incredible. Meta stock soared 11 to 12% in extended trading. Both companies emphasize sustained AI investments. Microsoft projects over 30 billion in Q1 2026 capex, while Meta raised its 2025 guidance to 69 billion midpoint. Analysts noted the results legitimized the AI supercycle thesis driving tech valuations. That was a real concern. Remember, a lot of people floating the idea around, well, is this just hype? Is it going to result in anything? Are they spending too much on AI? And I think this earnings just proved that it's not really a massive bubble, and they are actually managing to earn a lot more money with all their investments in AI. These earnings marked a tipping point for the AI arms race, finally delivering measurable return on investment on years of capex. Investors betting on long-term AI monetization now have proof to back those trades, and that's how important that is. The two big AI arms, Microsoft, Nvidia, they're now proving that their capex is their return on investment on years of capex actually is resulting in something that most people were fearing. We are now about 20 minutes away from the inflation data, so let's have a look at the markets. Are they getting volatile? Let's go over to the S&P 500 futures markets to see what's going on there. Here we go. We are actually up in the after hours 0.4%. Remember, the crash happened, then Meta, it was incredible. Look at that. That's what happened. FOMC meeting, everyone was a bit scared, and then earnings got released, bang, straight up. Meta and Microsoft completely changed the tide of the S&P 500. It continued in the after hours, and I think Nasdaq as well performed really well. If we go to Nasdaq futures, yeah, I mean, look at that. Nasdaq is up 1.2%. Absolutely incredible day in the markets. Let's go over it. Yeah, Nasdaq up 1.23%. We've got the S&P 500 up 0.4%. Nasdaq obviously outperforming the S&P 500 to quite a large extent. Nasdaq obviously a lot more tech heavy. I just want to see how the Nasdaq has been performing compared to the S&P 500. It's up 25% on the year. What's the S&P 500? Let me just add the SPY or SPX. The S&P 500 is up 16%. Nasdaq is up 25%. So all those people that say Nasdaq is a better ETF, well, you might be right. You're definitely earning a lot more money right now in the Nasdaq compared to the S&P 500. The issue of the S&P 500, it just has a lot of old companies that just keep dropping off, and the tech is the next big thing. So always take that into consideration. So let me have a look at the crypto markets as well. XLM is up today, up 3.4%. It's all going to get volatile in the next 25 minutes. I mean, there's not even any point looking at this because it's all going to change in 25 minutes, whether it's going to be to the upside or the downside. It's good to see a double bottom on XRP at $3. What else do we have? Filecoin, wow, really went down yesterday. Perfect opportunity at $2.35. Ethereum is up slightly. Ethereum is getting close to breaking this $4,000 barrier. We've sort of had about 4 attempts at it. This would be the 4th attempt at breaking that. If that does break, that's a great sign for the altcoin market because you're probably going to see all-time highs on Ethereum. So we'll have to see how that plays out with Ethereum. I do think Ethereum will sort of outperform the altcoins, Bitcoin will outperform Ethereum, and then it will flow into each other, but we will see. 4,000 will be a key level for Ethereum to break, and that is not too far away now. Okay, let me go to your comments and questions. H-bar is up 6%. Algorand up 4%. So these ISO tokens are doing quite well today. Let's refresh this. We're going to be keeping an eye on September rate cuts because that is important. Right now, no rate cuts priced in. Okay, let me go to your comments. If you are live with us, we're about to cover the inflation report coming out very soon. So please do hit the like button. Nice day. Let's see what happens in the crypto space. Hopefully a green day. Pump it up. Pump it to short. It is possible, but we shall see. Every time we hear the rooster, it pops. What pops? Oh, the stock. Nope. If you should always look at the time. The time very much says when we're going live. It's normally 5 minutes past half an hour, but you can always see it. It's in your time zone. Crypto and stocks pop. Live. There's the newsletter link. If you haven't got the newsletter, all the stories we've just published, I've just come to you with, plus the deep dive, which we didn't cover, it's all in the newsletter, so do go check it out. If you were wondering about the crypto report, I've broken it down in there, a 600-page report broken down into 900 words. Good morning, everyone. Good afternoon, all. Hello, Henrik. Hello, William Myers. Hello, Mike. Money printers are going to be going burr. Well, actually, the Fed literally said that they're going to continue the tightening, so doesn't look like the money printers are going burr at the moment, because if you listen to Jerome Powell, he is continuing the tightening. From now on, I'm always expecting a red day because I refuse to lose. Interesting way to look at it. It's all about perspective, isn't it? Today, Trump is scheduled to present a cryptocurrency report. When this is expected to happen, it's already happened. It's in my newsletter. It was yesterday. The fact that alts gave recovered 100%, but Bitcoin still hasn't recovered is a huge conviction for me that altcoin season is going to. The fact that alts gave recovered 100%, that's just not true. Let me show you this. Alts are down against Bitcoin. I mean, choose an altcoin and put it against its Bitcoin pair, it's down. Or you can just look at Bitcoin dominance. What part of this is showing you that alts are outperforming? Alts have recovered. I don't know what you mean by alts have recovered. It's just Bitcoin dominance continuously moving up. I've even got an altcoin season indicator for you over here as well. Here you go. This is total 3. So that's total cryptocurrency market cap excluding Bitcoin, Ethereum, and then minusing USDT because that's the biggest stablecoin, and you can see altcoins are very much at the low end of this, and they are on a trend towards the downside compared to Bitcoin and Ethereum. So I don't know what your point is. Right now we don't look like altcoin season, and there has not been a big recovery against Bitcoin. Bitcoin has stayed steady. Altcoins have come down over the last few days. Mr. Burns rubbing his hands together. So if markets price in hold, then a cut in September, would that be a bullish event? So if markets price in hold, then a cut in September. So if markets price in hold, that's already happened. We've already seen the FOMC meeting yesterday. They didn't cut rates, so it's not really priced in. It's happened. So your question is, if markets cut in September, would be a bullish event? I think if we get a rate cut in September, or if we start pricing in a rate cut in September, it'll be bullish, because right now we're not pricing in a rate cut in September. What's up, brother Sensei? Welcome to the show, Silverbird. How are you doing? Nice to have you here. Hi, Mike. Hi, Silverbird. We hit that all-time high in February, then it just fell hugely in May. What's that in regards to? Songs for Space. Morning, Mike. Powell was talking about a possible rate cut last year Powell was talking about a possible rate cut last year of the Biden administration. Now with Trump, it's always no. Powell is playing politics, not. I don't know if I agree with you, because with the Biden administration, whether you like them, you hate them, I'm not trying to be political here, but it was very clear what Biden's policies were. There was his his policies were pretty clear, and it was a pretty stable time. The stock market was absolutely booming, massive gains, one of the best ever stock market performances under a president, and the policy was pretty clear, no sudden changes. When the job of the Fed is to keep the economy in check and to make sure inflation's down at 2%. When you have external factors like tariffs come into play, and mainly tariffs, I would say, is what's stopping them from cutting rates. When you have tariffs come into play and you don't know when they're going to come into play, you don't know how long they're going to be extended for, and they continue to get extended, and when deals come into place at different percentage points, you do not know what effect that's going to have on the economy or on inflation. And the Fed's job is to keep inflation at 2%. If they start cutting rates too soon, then the issue is inflation can come back up. Tariffs can affect inflation because tariffs are... Everyone has sort of agreed that tariffs will add to inflation. You can't really doubt that. It's just how much. So under Biden, I'm sure there would have been cuts right now. But is that just because he was a Democrat? No, it's because he wouldn't be having tariffs in play. If there is tariffs and they don't know about the certainty of the economy under these tariffs and what inflation rates, they're going to be more cautious to cut rates. And if you look at the economy as a whole, there is no reason for them to cut rates because there's no big unemployment, there's no red flags in the economy right now, so they can afford not to cut rates. And the worst thing to do is cut rates and then increase them again because inflation's gone up. So I don't think Powell is... He might be political, he might not be, but I'm just saying if you look at the economy, there's no reason to cut rates. And why cut rates when you don't know what the future of tariffs is going to be? So tariffs is, in my opinion, the main issue right now. And whether that's a good or bad thing, at some point rate cuts will come. So maybe a month or two, they want to get it right, in my opinion. So it's not just as simple as under Biden they would cut rates. Yeah, they probably would. But why would they cut rates under Biden? Not just for political reasons, in my opinion. Even though everything's turning a bit weird now, the Fed is going a bit political. You've got those other two Fed... first time since 1993 that two Fed representatives are saying we need to cut, so and not agreeing with the chairman. I believe we go red in for September. Do you expect XRP to drop to $3? I've said it's going to go to $3 and it's done it twice now. Will it go again? Probably at some point. Fed isn't, again, I never give financial advice, it's my thoughts and opinions only. Fed isn't predicting the future but working on the data that is past, so what's the reason to wait for tariff effects? Powell is totally wrong here. I think we can all make our judgments. Everyone has their own opinions, but at the end of the day, the Fed should just go off data. It would be a big accusation to just say that they're doing it for political reasons. We'll see. Afternoon, everyone. Hi all and good morning. Added some more gold yesterday, 3272. Congratulations, quite happy with that in these times. Yes, gold is always great. I had an article in the newsletter the other day, didn't I, Matthias? $4,000 gold is some banks' predictions over the next year. The Fed has a 100% failure rate when cutting. I consider it done on purpose. Trump loves inflation. He wants a weak dollar. He does like a weak dollar. I think he's even said that. Tariffs bring in billions. Economy is strong. Tariffs are actually doing good for the US. GDP increasing. IDKY, the media is not saying this. I don't know why the media isn't saying this. The recession narrative of foolishness. US has more money. I wish it was as simple as that. Matthias, thank you for your super chats. I feel like... very cool, brother. Salute from the USA. Thank you, Brett. Thank you so much, Sensei. No worries at all. Good morning, everyone. Today is going to be great. I hope so. I've answered that. What's your most likely scenario? I don't know. If I knew what the inflation or joblessness claims would be, I would have a massive options call or prediction market or leverage position, and I would be a millionaire overnight. Been buying silver and gold low enough for me to buy now. In response to XRP. For XRP. I've always said XRP probably sideways over the next month. Then on anticipation of the ETF in September, it could potentially go up alongside a rate cut. ETF comes out, maybe a sell the news, and then continued move up, and then $10 by sort of October, potentially. Beautiful all, make America great. Oh, I'm missing some comments. Make America affordable again. Well, inflation's not going to, as Martyn was saying yesterday, we're not going to get any cheaper, but the rate could start slowing down. Obviously, rate cuts will help with that as well, mortgage payments and everything like that. Make the world safe again and abundant again. Yes, that would be great, wouldn't it? USA to the moon, Trump all the way. Looks like the market already has a possibility of good news on reports of pricing already. David, I think that's all about the Meta earnings. Meta and Microsoft earnings, that's why it's up. I don't think we've really priced in what's going to happen in the next 10 minutes. Sensei, what do you expect to happen to XRP in the next few days? I don't really look at it on the next few days time frames, especially when we're already at $3. A few days ago I was confident to say $3. Right now I don't really have an opinion. I think we'll just go sideways. We'll see what happens with the inflation report. That could we've had the FOMC, we've had Microsoft and Meta. Now let's see the inflation report, and then we can start deciding what will happen in the next few weeks. Loving the newsletter, Sammy. I really do appreciate that. Thank you so much. That means a lot when people say something about the newsletter. It's very close to my heart. What is the big news today? Inflation and jobless claims coming out in the next 10 minutes. I was about to sell half before earnings cloud. I did not. Congratulations. Microsoft report was crazy. Printer's already at max, bro. No, it can certainly go much more than that. We've got Martyn with the inflation report, so I'm going to send... wait, not yet. Let me check what the time is on this. I think in about 10 minutes. Oh no, we're ready to go. Martyn's ready to go. So what I'm going to do is just wrap up this and send you straight over to Martyn. Morning all. Only boom because it crashed first. The Trump admin has the best economy ever. Heard a goodbye right now. I don't have an opinion right now. I don't think so. It's pretty high. Too late, pal. Get him out. I love it. Hi, can you tell me more about HBAR? HBAR, I like. HBAR Golden Cross, thank you. Trump's first term, the international trade deficit Trump profits to reduce went up. US trade deficit in goods and services in 2020 was the highest since 2008. Thank you, Guy, for bringing a balance to the argument. Trump's first term, the number of people lacking health insurance rose by 3 million. Thank you for your thoughts. 5 minutes. Thank you, Martyn. Hello, Sensei. Genuine question. My crypto is on my ledger. I've read that it's not all that recommended to sell on ledger. So based on that, what would, when you say come to sell, transferring to Robinhood and selling Robinhood? Yeah, very, very, like, I don't want to give you sort of a recommendation, but that's certainly an option. I would say if you have it on a ledger, you don't want to be messed around with the fees that the ledger exchange might force you to have. I don't know, check it out. But it's very easy, just in little chunks where when you're getting close, and remember, once you start getting close to those prices, you might want to send it over. Robinhood seems pretty legit, right? So I wouldn't be too worried about it. Obviously, Coinbase seems pretty legit as well. Maybe Robinhood has better fees. Anyway, send over in little batches when you're getting close to your take profit targets once, and then you can just put a limit order on Robinhood, sell it. Once it's coming up to your next level, if you're laddering out, you can send a bit more, put another limit order, and then it's very easy to take out into your bank account, I imagine, from Robinhood. So yeah, that would be my way of doing it. Is United Health a goodbye? If you do a super chat, we can have a look at it. Thank you, Sensei. Right, says Seth Houston. Okay, cool. Well, we're going to go over to Martyn. In 10 minutes' time, you're going to have the inflation report. Martyn is going early, 3 minutes, to have the build up and have all the news sources ready for you guys. We've got MicroStrategy earnings tonight. That's all in the newsletter today. You've got 25% tariffs on India. That's in the newsletter. The Microsoft news, the Fed FOMC roundup news, the Bank of Japan. I'm sure Martyn's going to cover this because I've don't have time, but the Bank of Japan news is on there. The White House crypto report, no mention of the strategic reserve. Well, go and check it out. I digested the 163-page report and put it into this newsletter, so do go check it out. And the one thing I'm going to leave you with is the numbers again. All eyes are on inflation. We're going to get it out in the next 10 minutes. Be ready. If it's less, some economic calendars are saying it's 0.3, but that's wrong. It's around 0.24 is the consensus. So if it's around 0.2 or less, hopefully less, month on month, that'll be great for the markets. 2.6% and less year on year. If it's over 0.3% or 0.3% or 2.8% year on year or above, that would be pretty bad, because that's that whole narrative of sticky inflation. The Fed wouldn't want to cut because inflation's still above their 2%. So that's one side of it. Remember those numbers. It's in the newsletter. Initial jobless claims. We're going to have them coming out as well. And this is like a bigger recession indicator. If you get a big spike, we're expecting them around 230,000. Last week, they're at 217,000. If they continue this uptrend and start, 230,000 will be as expected. Still not great because you're sort of going up, but that'll be fine. If you get 250,000, then the market's going to be concerned about this uptrend. And once you start reaching 400,000, I don't think we're going to get anywhere near to 400,000 in this report, but the trend towards 400,000, that's when we can start seeing a potential recession. So 250,000 would be bad, 230,000 and less would be good. Cool, 0.2% and less would be good month on month. 0.3% and up would be bad. So keep those figures in mind. I'm going to send you to Martyn. He's going to have all the information for you right now. So on your way out, make sure you hit the like button and subscribe. Go and check out the newsletter so you can have those numbers in front of you. Inflation is not going down, Richard Brown. Inflation is actually up. If you look at the chart, I'll show you the chart. Maybe we have time. Do I have time to show you inflation chart? Maybe. Inflation. Inflation. Month on month. Where's inflation? I don't have it for you right now. Over the last few months, it's been heading up. Anyway, that's what I'm going to say. I'll bring you some more charts. Hopefully, I've got a new tool to share with you all soon. Anyway, straight over to Martyn. Stay where you are. Until next time, take care of yourselves and each other. The link is pinned up above. There is the link where we're going right now. Martyn's got all the data. It's coming out any second now. Go and check it out. Until next time, hopefully this was useful. Here every morning. Until next time, take care of yourselves and each other. Bye-bye.